And welcome again to another edition of Market Analysis for today, June 3rd. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and this is a recording previous to the U.S. session open. Well, let's begin a new month. History doesn't repeat itself, but it often rhymes. That's the old saying meme stock traders may have on their minds to start the month of June. A post apparently from Keith Gill, who goes by Roaring Kitty on X and YouTube and the F value on Reddit, appeared to show a huge holding in GameStop. The result? The stock doubled early today, is trading again like the 2021 rallies that made the meme stocks famous. GameStop traders aren't the only ones who seem to be looking in the rearview mirror to anticipate what's likely to come down the road. The sell in May and go away adage has proved unhelpful so far this year. With the S&P 500 ending the month up almost 5%, the end of Fridays was particularly strange, with the index reversing the day's losses in the final minutes to finish 0.8% higher for no obvious reason. In short, investors decided to stick with the story that things are still looking up, as they have for most of this year. That comes despite a downward revision to growth in the first quarter as consumers held back. Earnings this week from Dollar Tree and Lululemon will give more insight into shoppers' appetite for spending. The Federal Reserve is also hanging on to its narrative of the past few months that the economy and inflation are still too hot to consider interest rate cuts just yet. Policymakers will just have to be patient. New York Fed President John Williams said that recently. By contrast, the European Central Bank is not being patient, even in the face of signs that the economy is gathering steam and inflation is ticking up. Along with the Bank of Canada, is widely expected to deliver the first interest rate cut since the COVID-19 pandemic this week. Now, the problem, of course, is that the past isn't always a great guide to future. Savvy investors will now be poised to jump on any signs of a pivot. For example, gold and silver prices are up a bit early in U.S. trading today, amid a lack of fresh markets moving news to start the trading week. The precious metals market traders are looking at the key outside markets that are leaning friendly for metal prices. The US dollar index is weaker and US Treasury yields have downticked. On the other side of the pond, Asian and European stock indexes were mixed for firmer overnight. US stock indexes are pointed toward mixed openings when the New York Day session begins. In overnight news, OPEC Plus has agreed to extend its crude oil production cuts in a bid to boost oil prices. The US data point of the week, if not the month, comes with Friday's May employment situation report from the Labor Department. The key non-farm payrolls numbers seen coming in at up 178,000 versus the April report showing a gain of 175,000 jobs. Now, let's take a pause here and remember these numbers by Friday. If we see something higher than 178,000, something much higher, that's the good news, bad news scenario. Good news because, more employment, more people working. Bad news for the stocks because that means that the Fed will most likely, perhaps, not cut, but rather, obviously, do another hike. Something below that and way below that, which is bad, then good. Stocks will rally, most likely, probably. So let's keep that in mind. Now, the key outside markets today see the US dollar index slightly down, and the NYMEX price, oil prices are near steady and trading around 76.75 a barrel. And the benchmark 10-year US Treasury yield is presently at 4.49%. With that being said, let's take a look at what we can speculate for today's market fluctuation. So we see how that on Friday, market did just, plummeted in the NASDAQ, but quickly retreated and tried to close the green or at least flattish. It didn't do that but we did open with a tiny gap up that has been closed, and the momentum is to the upside. 18,805 is the resistance. Let's see if that will be met today. So buying into this notion of the morning. I am gonna raise my support for this double top being created here last week, and the same token goes for the S&P. It did rally to our support and bounce off of it and just close in the green. I am gonna bring that up my support and use this double bottom. As far as for actually buying, as far as the Dow goes, well, we are right there in the puppy land. So let's just raise our level of support to 39,000. I'm sorry, level of resistance, I beg your pardon. And then our support to this low created by last week's fluctuation. So that's it. I'm more bearish in the Dow, but don't take me with that. Okay, so crude oil. So crude oil after that news seems to be, it did open with a small gap down, as you probably see here. I'm gonna bring down my support to $76 and bring down my resistance to right to that high of 78,400 and change, 7,500. So I'm still looking to be bullish on crude oil. Nat Gas. Oh, nice gap up in Nat Gas. So that is going to give us more of a bullish sentiment. So let's just bring that resistance up. Let's bring our support. So being bullish, buying Nat Gas. Gold. Well, gold continues to trade within May 23rd red candle. So we haven't really done much. We did pick our heads below 2320, so I'm gonna have to bring that puppy down to 2310, right around here, and bring down the resistance to right around that double top created last week also. So still, let's just be bullish. I'm still bullish with gold, so let's see, staying in there, buying it. Silver, it did fluctuate below our support, so let's just bring down our support to $29 for the week. Let's see if that will be met this today. But at that, I'm thinking silver is going to make a nice rally to the upside. So I'm going to be bullish with gold and with silver. Copper. Well, copper, the double top is going to be a resistance, and copper, I'm going to bring that to 450. So I'm anticipating copper is going to make a nice breakout to the upside. So Bitcoin. All right, so Bitcoin is looking to reach that 70,000 marker. Let's see if it reaches it. Then the currencies, the euro, again, looking for that 109. So being bullish. Pound, looking for that 128, so being bullish. And since the dollar index seems to be trending weaker for today at least, I suspect with this gap down to continue the pressure to the downside towards 104. 200, so that therefore we'll probably see a nice pickup on the currencies and perhaps also the metals. That's it for me today. Have a great trading day, and I will see you tomorrow.